Thank God it's Friday, but before we head to that weekend rest that we all need, let's do 55 minutes of business right here on Business Incorporated. And here's what we have for you on the program today. Can Africa achieve a zero waste status? We'll find out in our conversation on the program. And Nairobi stands is better as a preferred city for startups. And then in Egypt, subsidy cuts on bread is getting a lot of reactions. You're welcome to the program. I'm Ini John McCall. As usual, we start from the global space, telling you that oil prices rose on Friday, continuing to climb after OPEC Plus members Saudi Arabia and Russia indicated readiness to pause or reverse output agreement, and as an interest rate cut in Europe raised the prospect of a similar U.S. move. Brent crude futures rose 16 cents, that's about 0.2%, to $80.03 per barrel. U.S. West Texas Intermediate crude futures also went up 16 cents to $75.71 per barrel. Prices rallied on Thursday when Saudi Arabia and Russia tried to reassure markets on supply agreement. However, they're heading for a weekly loss after analysts saw Sunday's OPEC Plus meeting as indicating rising supply, which is bearish for prices. European Central Bank went ahead with its first interest rate cut since 2019. That happened yesterday, Thursday, prompting analyst expectations of the U.S. Federal Reserve following suit. Lower rates boost oil demand. And on Friday, market participants will be awaiting the release of Chinese commodity trade data for indication of demand direction in the world's second biggest oil consumer after the United States. We're still in the global space now. For metals, gold prices held steady on Friday and were on track for their first weekly gain in 3 as traders stepped up the bets that the United States Federal Reserve will start cutting rates soon, and we're looking about September, sending the dollar and treasury yields lower. Spot gold was a little change at $2,377.13 per ounce. Bullion gained 2%. So far this week, U.S. gold futures rose 0.2% to $2,396. The dollar hovered close to an 8-week low, and benchmark 10-year U.S. Treasury yield fell to as low as 4.275%. That was on Thursday. That's the lowest since April, making bullion more attractive for investors. Markets are now looking forward to that United States and non-farm payrolls data, which is due later on today. Now we come to Nigeria, where the current account balance has increased to $1.432 billion in 2024, and that's in spite of economic downturn in the country. And this is a report from the International Monetary Fund. In its World Economic Outlook for 2024, the IMF data indicates a positive outlook for Nigeria's economic growth and stability, showing a growing economy with increasing investment and savings, even in the face of erosion of investors' confidence. Nigeria's trade balance for the period under review shows a significant increase from $1.21 billion surplus seen in 2023. And still in Nigeria now, African Export-Import Bank has announced an additional disbursement of $925 million under the syndicated $3.3 billion crude oil-backed repayment facility sponsored by the Nigerian National Petroleum Company Limited. That's the NNPCL. This brings the total current funded facility size to $3.175 billion. Arranged and coordinated by Afrexim Bank, The accordion arrangement saw the rising of a combined total of $925 million from a consortium of crude oil off-takers, lenders, including but not limited to Owendo Group and Sahara Energy Resource Limited. This announcement follows the success of the first accordion tranche of $3.3 billion facility. Still in Nigeria, Wema Bank has received an upgraded rating from Agusto & Co., validating the bank's BBB plus rated with the ESG score of 2 and confirming a stable outlook for the bank. Agusto & Co. is a Pan-African credit rating agency and leading provider of industry, research and knowledge of Nigeria and sub-Saharan Africa. Now, by upgrading Wema Bank's rating from BBB to BBB plus, Agusto has confirmed that Wema Bank is of stable financial standing and more equipped than ever to keep fulfilling its duties as a commercial bank with national authorization. According to Agusto & Co., the upgrade of Wema Bank's rating to BBB plus is underpinned by improved profitability despite macroeconomic headwinds, lower impaired loan ratio, and better deposit mix. Stronger shareholders also support and is reflected in this success and the successful rights issue exercise and perpetual bond issuance that have also been considered. Well, still talking about ratings now, the Independent Project Monitoring Company, IPMC, has launched its first ESG ratings for banking and insurance companies. The essence is to encourage more positive actions towards the environment, social, and governance in the banking and insurance sectors. According to the chairman of IPMC, Mr. Robert Adeo-Odiachi, the evolution of ESG is to reflect broader transformation in the financial industry. Working with regulators and stakeholders in the financial sector, IPMC has called this meeting to emphasize the need to adopt more ESG practices into daily operations. Their focus for this initial rating meeting are the banks and insurance companies, and it's a consensus that this move would bring benefit to the sector and beyond.
Research has increasingly shown that integrating ESG factors into investment and business decisions leads to value. Sustainable finance is not about sacrificing returns. It's about recognizing long-term profitability and also recognizing that this is intricately linked to sustainability of their businesses. Investors are increasingly demanding that companies demonstrate their commitment to ESG principles, and those that do so are rapidly reaping the rewards.
Clergyman and former managing partner at SIAO, Mr. Ito Ighodalo, believes that more value would be added if intentional guidelines and regulation is enforced.
Along the line, there might be some legislation that will be put in place through the National Assembly or whatever it is that makes it compulsory for people to have a minimum level of ESG engagement or sustainability, ESG reporting and things like that. You know, a lot of the things that insurance companies do right now is because NICOM forces them to do it. So the regulator too has a lot to play in upping up its game very quickly and ensuring that everybody knows where they're going.
In rating top performance in the adoption of ESG by banks, IPMC recognizes Zenith, Access, Stanbic IBTC, Fidelity and UBA, while insurance had AXA Mansard, Custodian and Allied Alliance Nigeria, and Custodian Life Assurance.
We want to make sure that there is adequate governance. With adequate governance, we are able to ensure that there is sustained processes in our production and in our business, such that we produce responsibly, we use we use the resources responsibly, we deal with our staff responsibly, then we deal with ourselves responsibly.
IPMC believes that workshops like this would encourage sustainability in doing businesses as well as harnessing human capital. Yeah, well, we're talking about banks there and the insurance company. Well, good enough, we have an executive from one of those banks recognized right there with us. Perhaps you'll tell us how they got that ESG top rating. The executive director, Chief Operations and Information Officer of Fidelity Bank PLC, Mr. Stanley Amuche, joins us right here in the studio. Mr. Amuche, good afternoon.
Good afternoon.
So we see that IPMC recognized Fidelity there. You must be doing something right when it comes to ESG.
Yeah, definitely. We're doing a lot. I mean, we're one of the banks today in Nigeria that's taking ESG today to a greater level. We're doing a lot on the environment, on corporate governance, on staff, on governance. Of course, that's ESG. And therefore, if you talk about governance, I mean, our board, is recognized as one of the strongest board in the banking industry in Nigeria. We have people from different facets of the economy, those in oil and gas, investment banking and all that. So we have all those kind of people. So the quality of the board, the quality of discussion is very strong. Then you talk about the environment. We're doing paperless office, doing green financing and all that. So those are the things that probably they've seen, and that's why they're recognizing.
That's why you got that top performance. Yeah, sure. Well, congratulations
Thank
to
you. Very much. Yeah.
And but more importantly, at this time is the signing ceremony. We're counting down to recapitalization. I know that signing ceremony was towards that.
Yeah.
So tell us more about where you are ahead of the recapitalization.
Okay, yeah, thank you very much. You will realize that the Central Bank of Nigeria on the 28th of March 2024 announced recapitalization for the banking industry. That announcement, if you look at Fidelity Bank, we got the approval of our shareholders on the 11th of August 2023. So that shows that as a bank, we understand our business, we understand the environment, we have done what we call a capital needs assessment. And therefore, based on that, we went out to seek the approval of our shareholders to raise capital. And what we're trying to do is to issue 10 billion units of shares by way of public offering and 3.2 billion units of shares by way of right issue to existing shareholders. So that process has been in play. The signing ceremony is a step towards us opening to the market. And therefore, on the 5th of this month, just a few days ago, we did the signing ceremony where all the parties, of course, the process involves getting all the parties together.
Who are these parties?
So the parties will be people like the issuing houses, the banks, the receiving banks, the reporting accountants, and those are the parties that make up, then the stockbrokers and all that. So those are the people that will make up the parties to the offer. So we've gone through the process of getting all these people together, and they worked, prepared documents that were sent to the Securities and Exchange Commission for approval. So we got the approval of SEC, we got the approval of the NGS, and then we went for the signing ceremony. So after the signing, the next step is to get the final approval of SEC, which means all the documents signed, you present it back to SEC, and probably will get their nod to open the offer to the market. We hope to open the offer on the 20th of June this year.
Wow, that's just in a couple of days,
yeah,
like up a week.
Yeah, sure. That's what we'll do. So and it will be there for 28 days. 28 working days, so that will close on the 29th of July, 2024.
So it looks like you want to get into the market before others will come in. You want to ensure that you get your share first before the competition gets stiff.
Yeah, because if you listen to what I said initially, we started this even before the market. So ours was based on strategy, because we were looking at our business. Based on the current business we are doing, we believe we had enough capital to do our business, but we're looking at growth. So we're projecting growth. And we believe that, of course, if you want to grow, you have to have what it takes to grow. I want to liken capital like oxygen. Oxygen, the way human being breathes. So if you don't have enough of it, you will suffocate. And therefore, when we looked at the growth process and what we need to grow, and that's why we started as a lot early.
Even before the announcement?
Yeah, sure. We didn't wait. We're not reacting to CBN's pronouncement. We have been very proactive about our capital raise. That's what we're doing.
Well, there's been some jitters. Well, maybe not so much, but when the news about revocation of license, Heritage Bank's license, came on, we saw banking stocks dropped. And it seemed like people were now asking questions, or asking again, what's going on? Can I really invest in this? Is my money safe? And now you're going to the market, even this month, June. How do you convince people that Fidelity is safe?
Yeah, so I mean, let me say this again. Fidelity is very safe, and this is a bank that has shown capacity and growth over the years. I want to look at the last 5 years, for instance. If you look at the stock, which is what we're talking about now, the value that Fidelity has created between 2019, say May to May ending of the last month, which is May 2024, the value or the share price of Fidelity has grown by 507%, from about 1 naira 68 kobo at the 31st of May 2019 to 10 naira, about I think 10 naira 20 kobo as at 31st of May 2024. That's 507% growth. So what this means, if you do an average for every year, that's about 101% yearly. So what does this do? That shows we've been able to sustain growth, even save value for investors. Okay, so we know what the inflation rate today is around. As at April was around 33.69%. You talk about the NPR, I mean, at anywhere around 26.25%. So even if you combine all these costs together, someone who bought the Fidelity shares 5 years ago is able to pay this cost and still be able to make something. There are very few investments they're going to do that will yield that. And we've seen growth in almost all the indices you can think about. You talk about how the shares of Fidelity has tracked or dwarf most of the indices. Now you have the all share index. All share index grew to, within the same period I'm talking about, by I think it grew by about 200.
Yeah, we hit a new record high.
Yeah,
over 104,000 for the all share.
Exactly. So all that has happened, you will still see that Fidelity grew more than 2 times the all share index. Even if you talk about the banking index, which is what tracks the value of shares of the banking industry, Fidelity did 4 times.
So with this level of confidence, obviously you're not having any conversation about mergers. Maybe you acquire some banks.
Yeah, well, everything's on the table for now. What we're trying to do is just to get additional capital at the level where we are today, and by the time we get that, we'll be in a very good position to look at what is ahead of us.
Perhaps you can acquire a bank that needs help, to also, of course, it will also increase your branches and access and all of that.
Yeah, those are very possible things. As I said, everything is on the table for us. We're just, our plan is just to put ourselves in that position where you can just think clearly and then be able to take any decision. But if we need to acquire, there has to be value. I will look at those who bring that synergy, to us and all that. So that's what we're looking. But aside that, I think we're well positioned. We believe that the offer that's about to open, we're already getting feelers that people, they are seeing the investment in Fidelity, what is done over the years, and people are very eager to be part of what is happening in Fidelity.
Since, you were already planning to go to the market even before the recapitalization announcement.
Yes.
What was the major drive for that capital that you are looking to get from the market?
Okay, so when you are in business, at every point in your business, you need to sit back and look at, where am I going to from here? What kind of growth? We've seen a lot of growth in Fidelity in the last 3 or 5 years past. Been a lot of growth in almost all indices. If you look at indices like gross earnings, we've seen growth between 2020 to 2023, but from 206 on gross earnings, 206 billion to 556 by 2023. That's a cumulative average growth rate of about 39%. We look at things like PBT growing from 28 billion to 124 billion by the end of 2023. That's a cumulative growth rate of 64%. Look at other issues like savings account, that has also grown. Deposit total. So almost all the performance indices has been on a trajectory of growth. Therefore, you look at what kind of businesses are you seeing in the horizon at this moment. So what we've done is to look at what we call capital needs assessment. We did an assessment that, look, we're getting more businesses, and therefore we need to increase our capital to be able to take on more businesses. What we are doing is very perfect, but if we look at the next 2-3 years, we'll be needing additional capital to be able to do so that we don't get businesses we cannot do. And as I said, capital is like oxygen to the human being, to the business.
But this new capital, do you think it will get to small businesses? Because small businesses do say that commercial banks are not their friends at all.
No, but if you, Fidelity Bank has always been known for supporting SMEs. I believe even as a bank, the bank has been giving awards for SME support. There'll be probably few banks, if any, that have supported SMEs the way Fidelity has done. So it's more like an SME bank who supported SMEs, who grow new champions in the market, and that's what we're known for. So we'll continue to do that, over the years.
All right. Thank you so much, Mr. Stanley Amuche, Executive Director, Chief Operations and Information Officer with Fidelity Bank PLC.
Thank you.
And wish you the best as you head to the market.
Sure. Thank you very much.
Welcome back to watching Business Incorporated on Channels Television. We'll head to the markets now with Aniti Edits. Aniti, good afternoon.
Yes, good afternoon, Ini, and happy Friday, or thank God it's Friday.
Yeah, thank God it's Friday.
So for the Nigeria's markets, it was another back to the negative territory. But let's tell our viewers more details about the market. For yesterday, it was down by 0.15%, and that's coming from Wednesday's gain, which was 0.24%. But at intraday, the market is still in negative territory as we speak, and these numbers are still moving in between the green and the reds. But so far, what we last tracked was 0.30% in the red at 99,101.5 index level. That's for the Nigerian stock market, the NGX All Share Index. And for the South Africa stock market, the JSE, it was down by 0.11%. So we saw mostly a negative sentiment for the African stock market. Now, let's take a look at the other sides of the market. EGX, it was down by 0.77%. That was the biggest decline at intraday for the markets that we track, while Kenya Stock Exchange for Thursday's close up nearly 1% at 0.94%. Now, we're analyzing both the equities market and the fixed income market. For the fixed income market, yesterday we saw the bonds market. It was the average yield there. It closed flat at 18.6%. So we saw a bearish sentiment for the bonds market, and for the Treasury bills market, it was a bullish close for Thursday. And the average yield there, it contracted by 2 basis points to 22%. Same with the average yield at the almost segment, which it dipped by 2 basis points to 22.0%. Now, for deeper perspective on these two markets, let's bring in our analyst for today, James Adisa, financial market analyst with Chapel Hill Denham. Thank you for joining us, James. James Adisa.
Thank you for having me.
Okay, so now let's start first. This is the last trading day for the first week of June, which we saw the FGN savings bond, which is closing today. We also saw the Treasury bills market as well as on the equities side. So how do you analyze this market so far in the last 4 trading days?
So for the Treasury bills markets, in the primary markets, we saw, in the money markets, primary markets, we saw the central bank conduct 2 auctions, one on behalf of the DMO. The Treasury bills auction was to roll over about 221 billion naira. We saw strong demand that auction. The bid to offer ratio was around 3.2 times, right? And we saw yields remain at around 20.67%. And for the OMO auction, we also saw strong demand. We saw the bid to offer ratio print at 2.1 times, and yields trended a little bit higher, about 1 basis point up to about 22.33%. And so we've seen that disparity between the Treasury bills market and the OMO market. And in my view, I think that the difference between these yields is a reflection of the different goals that both organizations have. So the Central Bank of Nigeria is trying to, ensure price stability. They're also trying to mop up excess liquidity, and so they are offering attractive interest rates to cultivate foreign inflows and also to, attract domestic investors. And on the NTB front, we know that the DMO is also very mindful of the fact that they've done about 75% of the domestic borrowing so far. And so they're not so aggressive in, front-loading issuances. And we also know that they are mindful of the balance sheet implication of, higher interest rates. And so that means that they wouldn't really be, offering attractive interest rates the same way the Central Bank of Nigeria through the OMO market has been offering attractive interest rates.
I do need to speed you up a little bit because time is not really on our side. But let's move over to the intraday market numbers. How is the equities market and the fixed income market doing at intraday as we speak?
And so in the equities market, the market is up 4 basis points. We're seeing a lot of interest in Guinness. A lot of volumes are going through, lots of interest in the stock by investors. Based on our attribution analysis, we see that stock like Wando, Presco, Nigerian breweries, ITIA, and international breweries have really been the ones pushing the market. They've accounted for about 75% of the gains that we've seen so far. And, our view is that we've seen the market rally in the previous trading week, and we believe that this week we won for profit taking. And as such, we expect that the market, although it has closed up, we expect to see that the weekly return possibly be in the negative territory.
Okay, all right. So now what do you expect for next week for the equities market and the fixed income market? What are your expectations?
So for the equities markets, corporate actions would largely drive the activities that we would see in the market. We've seen some banks like Fidelity come out to announce that they have capital raising plans. They intend to raise about 227 billion naira, and we expect to possibly see some more of these transactions come to the market, and this could translate to activities in the equities market. In the fixed income market, liquidity would really be the driver for the market. Liquidity conditions have remained tight. The CBN has conducted an OMO auction and an NTB auction on behalf of the DMO, and this has further tightened liquidity conditions in the fixed income market. And so we would expect to see a quiet market next week.
Okay, James. So I think we'll leave it there. And of course, we do keep our eyes out on your expectation on the market. So thank you so much for your analysis on our show.
Thank you very much for having me.
James Adisa, financial market analyst with Chapel Hill Denham, on the fixed income and the equities market at intraday. Now let's talk about the Middle Eastern market, where we see the two markets on the United Arab Emirates performing positively at intraday, 0.11% for the Abu Dhabi and a flattish positive for the Dubai FM at intraday. But these numbers, of course, they are changing as we speak. Now, on the other side of the market, we see both the Qatar index as the Tadawul and the Saudi Tadawul and the Qatar in the green for Thursday, and this is coming as Saudi Arabia has announced that it is set to raise more than $11.2 billion. This is coming from that Aramco's IPO, which was announced about a couple of weeks ago, and with a target range of about 27.25 Saudi riyals, which is equivalent to about $7.27. According to Wall Street Journal report on Thursday. So that is one of the factors that raised the Saudi Arabia's stock market for Thursday in that flattish positive territory. Now let's move over to the United States, where we see the stock futures, they're a little change. This is because investors are right about now bracing for the May jobs report, which is expected to come out at about 190,000 jobs being created last month. So, but for the Dow Jones Industrial Average, we saw it in the red. These numbers, well, they definitely will change when the U.S. stock market closes at about 9 o'clock Nigerian time. For the S&P 500, it was unchanged at a neutral at sometime earlier today, while the Nasdaq was up by 0.10%. So now investors will be pouring into this report looking out for signs of a weakening labor market. This is going to be an evidence of a slowing economy that may support interest rate cuts from the U.S. Federal Reserves. But meanwhile, next week, the U.S. Federal Reserves will be holding a policy meeting and will give its decision on rates after that meeting. And the central bank is expected to maybe hold the rates. Economists are polling at a roughly 70% chance that policymakers will ease the rates come September. So that's it for the U.S. market. And finally, for the Asian market, we see mostly positive, kind of a mixed picture there. This is because at some point, China today released the data on their exports, which shows that the exports was up 7% against the 6%, which was anticipated by economists. And then on the other side, we saw the imports was up 1.8%, but that's against a 4.2% estimate by economists. At the same time, we saw Japan releasing its household spending figures, which we see has reflected on the Nikkei 225 at a negative 0.05%, while South Korea's Kospi coming after the holiday into a positive close, 1.23%. For the Hang Seng Index, 0.59% in red territory. On the other side of the market, we see Shanghai positive 0.08%, while the Australia's ASX 200 positive 0.549% for the close of Friday. So that's it in a nutshell for all the markets that we track.
Thank you so much, Aniti. I'm sure after those numbers, the job data from the United States comes out today by Monday.
It's right about now. What
Yeah,
about
so
now?
we're going to see reaction from the market. I'm sure on Monday we'll have those numbers. Thank you so much.
Pleasure.
All right, now let's go to Europe. Yesterday we had that much anticipated, much expected bank cut interest rate cut by the European Central Bank, and it's the first major one. Although the day before we had Bank of Canada, and now it seems they're putting a lot of pressure on the United States. Can we still have a cut in September? But anyways, let's stay in Europe now. After this cut, let's see what has been happening with Chiponda Chimbelu joins us now. Hi, Chip. I don't know if to say congratulations for you to you guys for being ahead of the Western countries cutting rates.
Thanks for having me. Well, it is, of course, welcome news for households, businesses, and even governments that are borrowing right now. The European Central Bank lowered its key interest rate by 25 basis points to 3.75% from 4%. Now that brings down the cost of borrowing. And here in Europe, the economy has been slowing down. Businesses have been investing less as a result of high interest rates. In Germany, one of the most affected areas has been the construction industry. That is, of course, a sector that needs more investment due to the housing crisis. The scarcity of housing in big cities is hurting people's purse strings because rents are high, so they are spending more on accommodation. Now, the hope is that the ECB will continue lowering rates this year, but there are no guarantees. The central bank said it would base any future rate decision on economic data. It is not committing to a series of rate cuts.
Wow, so we don't know what to expect in the coming days. There's a lot of uncertainty there.
Well, the Eurozone faces a couple of challenges going forward. Inflation in May rose for the first time this year to 2.6% from 2.4% in April. Now, that, of course, is according to the latest Eurostat estimate. And wages are also rising, so the expectation is that inflation will remain above the ECB target of 2% next year as well. Many analysts are now ruling out an interest rate cut next month, and September appears to be a toss-up. In fact, there are some suggesting that the ECB may have lowered interest rates on Thursday because monetary policy makers didn't want to backtrack and disappoint on the much-anticipated decision. ECB President Christine Lagarde said that inflation was under control last month, but recent data suggests otherwise. So we can expect markets to keep a close eye on the economic data in the coming weeks, much like ECB officials will be doing. And of course, what is happening across the pond in the US may also influence decisions here. Divergent interest rate policies between the ECB and the US Fed could hurt the Eurozone economy in the long run.
Yeah, okay. Let's turn to the markets now, Chief, and see how our European stocks are doing.
Well, European stocks are a little changed today. Very few moves are expected as markets await much anticipated US jobs data. That information could help analysts predict the future course of US interest rates. And it could very well help answer the question on whether the US Fed and the European Central Bank are headed for diverging paths on interest rates. Apart from that, here in Europe, Eurozone first quarter GDP final figures and German industrial production data will be released today. And markets will also be following reports that the US is planning to launch an antitrust investigation into the world's two most valuable companies by market capitalization, tech giant Microsoft and chip maker Nvidia. Media reports say authorities are concerned about their dominance of the artificial intelligence sector.
All right, Chip, thank you so much for that. And just as Chip was talking about the job data, it's out now from the United States, and it shows that 272,000 jobs were added in May. That's more than the forecast. So, of course, this puts a lot of, or a big question mark on if the Fed will continue its plan to cut interest rates in September, saying that jobs are doing well right there. But I think by next week, this is going to be a major driver of the market and conversations right here. All right, now let's move on down. We come to Africa and ask the question, is zero waste possible? Is it possible? Can we turn our waste to everything useful that it can be turned to? Well, joining us for this is Bola Jisopolua. She's the Group Managing Director of ETK. And well, good afternoon, Bolaji, and thank you for your time.
Good afternoon, Ines. Nice to see you again.
Great. I think I should start by saying congratulations for being called one of the most influential global top 100 export and international trade leader. And I guess we can throw any question on international trade at you and you'll be able to handle it.
Thank you very much, Edie. I'm always humbled to be included in these lists, so really grateful for the opportunity.
All right, so we're asking if you see zero waste Africa. Is it possible in the area of businesses, especially?
You know, when we talk about things like zero waste, it's a very, very aggressive ambition, particularly for African markets that struggle to, get rid of their existing waste and get rid of their existing issues around how that waste is produced. So whilst I think it is possible, I think the first things first would be to create a strategy towards reducing waste and disposing of the existing waste problem as well, rather than sort of just leapfrogging into a zero waste discussion. But I do think there are ways and there are strategies that can be put in place to make this happen. I think one of the greatest gifts to I would talk about Nigeria, to most Nigerian cities is what they call the computer villages, where mobile phones are refurbished and resold. And I think, that's one way of looking at this problem by scaling up those kinds of centers where products can be refurbished, repaired, and resold in a transparent manner so that people know that that's what they're buying, but also that in the first place, we're importing goods that were built to last rather than goods that will very quickly spoil and not be able to be used again. So these are some of the things that are very simple, but I think will be very useful for looking at the zero waste situation on the continent.
Yeah, obviously, simple is not always so simple. But I think another thing that comes to my mind is there may be the need for a lot of interconnection between businesses because one business's waste is another business's raw materials. But my problem is who's going to coordinate it? Where does the cycle start from?
So this is where the private sector does come in. There can be. I think there's the Nor Fund recently invested. I think it was 12.7 million. I think it was in startups in West Africa that were circular economy startups. So there needs to be an encouragement in the local ecosystem, startup ecosystem, for these kinds of companies to emerge. In the US, just recently, looking at the fashion industry specifically, there's been a very rare bipartisan bill that has been put forward I think it's for $14 billion to encourage the circular economy and to invest specifically in fashion and textiles, in the circular economy for fashion and textiles. And so it really needs to be private sector led and driven, but with the support of the regulators. So there needs to be law that is put in place that actually supports these kinds of coordinations and partnerships and relationships between business to see this happen.
Well, I mean, then the private sector, obviously, as you have said, would require the environment. Ease of doing business is one phrase that is so common here. But the truth is, when it goes to practicing it or implementing it, then there's so many questions raised, and it just leaves the private sector hanging. I mean, if you take a closer look at the situation in Nigeria, what practically do you think the private sector can do with what we have? Knowing that, I mean, the issue of the environment of doing business is not as friendly as one would have loved for it to be.
Well, I think, innovation always plays a role in these things. I think Africa is always at the forefront of solving their own problems. I think when you look at a place like, I'll give an example again of the cotton industry. At the moment, there's a lot of studies going into creating more sustainable ways to produce cotton, because as you know, it uses a lot of water. And the fashion and textile industry as a whole contributes 10% to carbon emissions in the world. So again, there's a whole discussion around cotton substitutes such as hemp, and that's been piloted in Malawi and South Africa. And you also have recycling waste into fibers. It's happening in Egypt and South Africa. I think South Africa's company is called something like Rewoven, and they are producing fibers out of virgin fibers and recycled fibers. So I think what needs to happen is that the private sector needs to create their own technology and innovation spaces and circles so that they can come together and think about how they can realistically approach these things. The other day, someone was telling me that if we were to collate all the waste that comes from Ashrabi alone, because particularly talking about the fashion industry and the fact that almost every occasion has a different outfit, to celebrate in Nigeria specifically. If we were to look at how we can recycle some of those materials to create new fibers, that is one way that businesses can work towards achieving zero waste, particularly in the fashion and textile industry. So these are just examples, but there are definitely bottlenecks that businesses experience in creating these kinds of incentives. But I definitely think looking at sub-regional governments, looking at Lagos State, looking at Delta State, looking at some states in Nigeria that are actually very actively pursuing green initiatives, and looking at how you can locate your business in those states where there is at least a minimal framework towards achieving this.
Yeah, well, I like the fact that you did mention something that resounds among many Nigerians. I'm sure that will get a lot of people thinking. And as you said, nobody should expect that it will come easy. No idea, actually, or no good thing actually comes easy. But we have to thank you so much for sharing your ideas and your time with us this afternoon. Bolaji Chifoluwe, the Group Managing Director of ETK Group.
You're more than welcome. Thank you, Winnie.
Well, talking about startups and businesses, Kenya seems to be doing good because Nairobi has improved as one of the most preferred cities for startup investment, climbing a whole 24 places to be 113 globally. It used to be 135. That was last year. According to the latest Global Startup Ecosystem Index report published by Sector Research Center Startup Blink, Nairobi also rose one spot among African pairs to rank third after it pipped South Africa's Cape Town. The latest ranking points to a sustained perfection by Nairobi from the 163rd place that it occupied in 2022. In yet another win for Kenya, Kisumu made it to the global top 1,000 list for the first time, holding the 985th position, while on the downside, Mombasa slipped from the coveted group, continuing on its last year's course. And now we'll go to Egypt, where it's not a good story from there. Quadrupling of the price of subsidized bread has made it harder than ever for millions of Egyptians to get by. Egypt's government is facing a rising wheat import bill, increased the price of subsidized small loaves of flatbread for the first time in decades. And this happened on June the 1st. The loaves are available to more than 70 million people and are vital for the poorest, even though they are still heavily discounted. The increase to 20 pistas, that's about $0.0042 for a loaf from 5, is one that made households can ill afford. We're still in Egypt. The International Monetary Fund and Egypt, they've reached a preliminary agreement that should help unlock the next disbursement of the North African nation's $8 billion loan, $8 billion. That is, the staff level agreement which must be approved by the organization's board, will give Egypt access to about $820 million. And the nation and fund economists came to terms on policies and reforms that the country should implement to complete the third review of its loan, which was originally agreed in December 2022. Let's head to the crypto space now and see what's happening there. Some interesting stories I saw just before coming on. Perhaps there are more interesting ones by now. But New York Stock Exchange is partnering CoinDesk. What could that mean? What could they have? I wonder. Well, we will get into that after looking at the numbers. Let's head to the board and see what's going on with the numbers right there. We see that Bitcoin has been doing well for some days now. It's been pumping. I think that's the word they use sometimes for it. It's $71,268.85 after it gained 0.43% in the last 24 hours. Ethereum and some other majors aren't looking so good. This is an unusual picture because normally once Bitcoin goes up, then you see the others follow even at a lower pace. But Ethereum is still above 3,808. Solana, Cardano, XRP, it's a mixed color this Friday, but the leader, Bitcoin, is going on. I think the index, the greed index is looking good also. Fair greed index is looking good at 77. It's extremely greedy. It's a very greedy market. Be careful how you tread. You don't want to fall a victim right there. But let's speak to Onua now and find out what's going on. That New York Exchange partnering CoinDesk is an interesting one. And we know that former President Trump, he has not hidden his love and support for crypto. I wonder how that will help him with all of the issues going on around his political career. But first of all, let's talk about the New York Exchange. Hi, Onua. Good afternoon.
Yeah, good afternoon. Thank you for having me.
Great. So what's this partnership about with CoinDesk?
Okay, the CoinDesk, that is partnership with the New York Stock Exchange. It's a great one, actually. New York Stock Exchange has been around for over 200 years. And with the partnership of the CoinDesk, they are trying to create a platform where the Bitcoin investors actually will see more real data about the price of Bitcoin market in the spot market, which is a very good thing for them to actually create more opportunities for more investors to have more confidence in the market.
What does this say about regulation and sentiment around, crypto generally when we see this kind of partnership?
Yeah, on the regulations on the crypto space, now with New York Stock Exchange coming together with CoinDesk, it means that most stakeholders around the market will be able to work in partnership with the real players in the market to make sure that crypto is fully grounded and the regulations will be fully on merit and give Bitcoin and other altcoins an opportunity to thrive in the US. Because currently the US government currently kind of like restrictive in terms of the crypto activities. Until recently when Trump came in on the side doing some publicity on the market. So with the combination of these ETM, CoinDesk and the New York Stock Exchange, it gives an opportunity for them to come together, all stakeholders coming together to make sure that the operations and the market of Bitcoin is actually thrive very well.
Now, talking about Trump, his support for cryptocurrency doesn't seem to be helping him so much at this time. Very trying time for him.
Yeah. The US actually has over 50 million holders of Bitcoin as we speak. So that's a large volumes or so. But this current government is actually not supportive in terms of the crypto currency market in the US. And this has led to so many investors actually leaving the US because of this. And Trump is actually working towards having that platform to enable investors to come in on crypto. They want to be a giant in the US market when it comes to crypto. So I think it's the right direction, and also he's trying to use it as a political tools to get more donations in terms of support when he's actually freed of all the allegation that is enabled on him.
Well, just in a word now, where do you see the price of Bitcoin by Monday?
Yes, currently now, because of the market now, the market has been entering green so far now. Bitcoin actually hit $72,000 as of this morning and yesterday. This week it has been up by 5.something% this morning. So by next week, we are looking at the possibility of Bitcoin hitting $85,000 only if it closes above what it is right now, at least not below $71,500. At the Bitcoin price of close on market, so see a new trend to the upside from next week.
All right, Onuwa, thank you so much for your time. Onuwa Bodo is the Chief Executive Officer of Phoenix Online.
Thank you. Thank you.
Yeah, so now we can go and have a restful weekend, after we've done this 55 minutes of business. And I know that, sometime through the weekend, you go to our YouTube channel and watch Business Incorporated, or maybe watch Business Morning, and try to keep yourself abreast of business conversations until we meet on Monday. But Ladi Williams will be here. Capital Market is going to give you a summary of everything that's happened in the market this week. I'll see you on Monday, guys.